Welcome to everyone. This week video will cover the gold market for the week of September 22nd, 2025. Before we start, make sure you read carefully the disclaimer. It's been just over 2 months since I last analyzed the gold market on July 17th, 2025. Back then, the gold market was stuck trading in a triangle pattern between support and resistance levels. I predicted a major price drop in September, but also mentioned gold might hit new record highs first. Let's see what we can expect in the coming months. Let's examine the 18-month cycle first. As I mentioned before, as long as gold stays above its cycle line, the yellow line, the upward momentum continues strong. We expect this 18-month cycle to bottom out this month. Since my last update, gold has surged dramatically, reaching a new record high of $3,744 on September 17th. The big question is, was this the peak of the current cycle, or the start of a new one? Short-term cycle analysis will give us the answer. In the main scenario, the 18-month cycle should complete by month's end. If correct, we should see a sharp price drop back to at least the cycle line. The alternative is that this cycle actually finished in August, a month earlier than expected. Given the explosive rally since August's low, there's a strong chance the cycle bottomed in August. The short-term patterns will confirm this. Looking back to July 2018, we've had 4 18-month cycles totaling 67 months, averaging 16.75 months each. The Hurst nominal model suggests 17.93 months on average. If August was indeed the cycle low, the next upward trend should last until March 2026, with the following low expected in January 2027. Now let's examine the 40-week cycle. Since the last low in November 2024, exactly 40 weeks have passed. The Hurst nominal model shows an average of 38.97 weeks. This timing helps identify the 18-month cycle, since each 18-month cycle contains 2 40-week cycles. This strongly suggests August was the 18-month low. If August marked the 40-week low, the next peak should form in December 2025, followed by a low in May 2026, marked by the blue dashed line. If this scenario plays out, the next 40-week low should find support at its cycle line. Any sharp break below this line would signal trouble for gold. In my last update, I mentioned a significant rally would follow once the 40-week low was established. I also said gold should drop below its cycle line first. Actually, if August was the low, it stayed above the cycle line. What does this mean? This confirms strong bullish sentiment in the gold market, explaining the 11% rally after August's low. Assuming August was the 40-week low, I've drawn the cycle trend line, the VTL. When gold breaks below it, this will confirm the previous high was at least an 18-month cycle peak, so we must watch this line closely. The alternative scenario has both the 40-week and 18-month cycles still coming. This would mean a very sharp decline in the next few weeks. Since all cycles would be running long, this could be negative for gold. In bull markets, cycles tend to be shorter, in bear markets, they extend. The 20-week cycle. Everything points to August being the 20-week cycle low. Since the last low on April 6, 2025, 19 weeks have passed. The Hurst nominal model shows 19.48 weeks on average. The strong rally confirms an important low occurred. We can confidently label August as the 20-week low. During my last update, I expected this low around late August. The $3,353 low on August 20th was perfectly timed. The 20-week peak should occur around the 3rd week of October, with the next low in mid-January 2026, the green dashed line. During the next low formation, the gold market should find support at its cycle line. It's too early to know exactly where this line will be. It's crucial to watch where the next 20-week peak occurs compared to the cycle peak, and how the market behaves at the cycle line during low formation. Any sharp break below signals weakness. The green trend line marks the 20-week cycle boundary. Any break below confirms the 40-week peak has formed. The 80-day cycle. If our analysis is correct, placing the 20-week, 40-week, and 18-month lows in August aligns with market principles that suggest August was also the 80-day low. From April's low to June 30's low, the first 80-day cycle lasted 81 days, 13 days longer than the 68-day average. The last cycle from June 30th to August 20th was 51 days, 17 days shorter. While 51 days seems short for an 80-day cycle, it's common to have one longer and one shorter cycle. The average matters most. Adding both cycles gives 131 days. Dividing by 2 equals 65.5 days, only 2.5 days shorter than average. We can confidently conclude August was the 20-week low. While the 80-day cycle could run longer, it's very unlikely. The next 80-day low is expected October 27th, the purple dashed line, with a peak around September 23rd. During low formation, the gold market should find support around $3,670. The correction size depends on where the peak forms compared to September 23rd. If September 16th was the peak, expect a sharp correction. If it peaks after September 23rd, expect a mild correction. A sharp break below the cycle line during the next low would signal weakness. This year, with one positive trading signal, the 80-day cycle has a 100% success rate. The 40-day cycle. In my last update, I expected the 40-day low on August 11th. August 20th was when gold actually bottomed. My downside target was $3,152. The gold market missed this by $100, which is very bullish. On July 22nd, the gold market broke back above its trend line at $3,400 with strong momentum, providing a new high target of $3,550. On August 8th, 16 days later, the gold market hit $3,534, meeting the target for a $134 or 4% profit, then declined to form its low right at the cycle line on August 20th, another bullish sign. Typically, the 40-day lows should form below the cycle line. Since forming this low, gold has continued rising, hitting a new record of $3,744 on September 17th. This should be the current 40-day cycle peak. Since the peak occurred in the right part of the cycle, expect a moderate correction. After a major low, the first correction should find support at the cycle line. This low should form September 23rd, with the cycle line around $3,410. Strong bullish sentiment suggests the gold market might stay above its trend line. If the current 40-day cycle completes on time September 23rd, the next one should peak October 10th and bottom October 27th. During the next correction, gold should break below its trend line, providing a downside target near the 80-day cycle line, which should also mark the 80-day low. With 2 positive trading signal out of 4, the 40-day cycle has a 50% success rate. In conclusion, the gold market recent performance shows incredible strength, with multiple cycles potentially aligning in August to create a major buying opportunity. The key levels to watch are the various cycle lines, as breaks below them will signal important changes in market direction. While short-term corrections are expected, the overall bullish momentum suggests higher prices ahead through early 2026. Smart investors should monitor these cycle patterns closely to time their entries and exits effectively. For more details, visit tradingmarketcycles.com. If you found this helpful, please like and share this video, subscribe to stay updated with our weekly trading insights. Thanks for watching, see you next week.